Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
Another fragile week for risk assets, with light volumes ahead of a usually calm period for the summer holidays break. The main updates were the latest US CPI figures, Chinese economic data, UK GDP, and volatile commodity markets. The S&P 500 index fell 0.3% last week, while the NatGas composite ended almost 2% lower, and the European broad benchmark, the Stoxx 600 index, ended unchanged. The dollar index continues to advance, 0.8% last week, as the dollar appreciates mainly against the yen. Benchmark sovereign yield shifted higher 10 to 15 basis points, and the 10-year US Treasury yield closed at 4.17%, only 5 basis away from the peak recorded last October. Bonds are trading at 2.62%, and gilts at 4.53%, ahead of next week's UK inflation update. In economic data, the notable release was a marginal upward move for US headline CPI for July, printing at 3.20% year-on-year compared to the 3% print a month earlier. The core CPI reading came in at 4.70%, below the previous month. Both updates were better than analysts' estimates, and stock markets reacted positively to the news. In the UK, the GDP update for Q2 surprised analysts, with a 0.2% quarter-on-quarter expansion on the back of a stronger-than-expected manufacturing sector. The update increased the probability for a 25 basis point hike by the Bank of England to 71% at its next meeting in September. The July inflation readings for Germany came in at 6.5%, Italy at 6.3%, and Spain, by far the lowest inflation in the Eurozone, at 2.1%. Equities in developed countries traded sideways to modestly lower, especially growth stocks in the US with information technology as the weakest sector. The semiconductors industry was the main loser, with Nvidia shares declining almost 9%. A notable mover in European markets was the Danish stock index, which jumped 9% on Tuesday when pharma giant Novo Nordisk reported solid results and issued positive guidance on the back of strong demand for its weight loss drug. Shares ended 17% higher, for a total market cap of $316 billion. In the US, the highlight was also a giant pharma, Eli Lilly, with a 17.5% rally, after reporting an 85% annual jump in profits. Shares are 44% higher this year, to a market cap of $500 billion. On Monday, the Italian government surprised markets with a one-off 40% tax on bank profits resulting from higher interest rates. The decision was poorly received by markets and seen as a populist measure by right-wing Prime Minister Meloni, a hit to Italy's reputation. Shares plunged but recovered later in the week after Rome partially reversed the decision. Shares in Intesa ended 4% lower, and UniCredit fell just 1%. In commodity markets, the notable mover was European natural gas. Front-month futures contracts for the Dutch TTF benchmark rallied 40% on Wednesday, following a strike threat by workers at an LNG plant in Australia that could disrupt supplies. The price reached €43 per megawatt-hour, but eased to finish the week at €35.30, up 22% week-to-date. Crude oil prices traded higher for the seventh straight week, after the International Energy Agency forecast record global demand and tightening output. WTI and Brent gained around 0.5% to $83.20 and $86.80. Moving on to China, which was the main factor for lower base metal prices. China's CPI inflation fell 0.3% year-on-year in July, while producer prices declined more than anticipated, down 4.4%. Trade data also point to a deceleration in activity, with exports falling 14.5% and imports down 12.4% in the last 12 months. These figures suggest that China is facing deflationary pressures, despite Beijing's recent effort to stimulate the economy. Stocks fell 3.4% on average, with property developer Country Garden losing 31% after missing a coupon payment. A few bullets to finish today's episode. There were no monetary policy meetings by developed central banks, but 4 in emerging countries, with all maintaining rates unchanged. Mexico at 11.25%, India at 6.5%, Peru at 7.75%, and Romania at 7%. In corporate deals, U.S. apparel companies Tapestry and Capri Holdings agreed to merge in an $8.5 billion cash deal of enterprise value. The combination includes brands like Versace, Jimmy Choo, Michael Kors, Coach and Kate Spade. Crypto markets saw another week of sideways trading, with Bitcoin at $29,370 and Ethereum at $1,850, both modestly higher. Altcoins Toncoin gained 21%, and Shiba Inu added 12%. The week's headlines were PayPal's announcement of a stable coin, and Brazil's central bank's plan to launch its digital currency next year. That's all for this week. Please subscribe to the channel and help us promote it. Visit succinct.info to learn more about our subscription service. Have a good week.